Welcome back to another episode of the Dig Deep the Mining podcast. And today's guest is Julian Treger, who's the CEO of Audley Capital, who focuses on long-term investment opportunities in large-scale natural resource assets, where it has identified the potential to add significant value. Julian comes from the financial industry and has an MBA from the Harvard Business School and a Bachelor of Arts from the Harvard University. So it'd be good to hear what he's up to now with Audley Capital. So and see what they're up to. So let's welcome Julian back to the podcast. How you doing, Julian?
Great, Rob. Thank you so much for having me.
No, and I appreciate your time. So for those that may not know you, just wondering if you can just give us a brief snapshot of your background.
Sure, with pleasure. I mean, I'm not a mining engineer by training. I'm not, very familiar with the intricate workings of mines, but I have been investing in the space since roughly 2005. My background prior to that was as a corporate financier and then managing the first activist fund in the UK. So by definition, we believe strongly in being involved in situations where we invest and trying to be a catalyst for value creation. And I was lucky when I started to invest in the mining sector that we were on an upswing at that time. So I made good returns from initial investing, often in projects which weren't potentially long-term sustainable, but good learning experience. But I had my first real break when we found a company called Cambrian Mining, which owned Western Coal, which got into trouble. And we restructured that. And using the activist playbook, we created a lot of value. There was a bit of a roller coaster ride, but we sold it from almost bankruptcy for $3.6 billion. And thereafter, I was asked to join Anglo Pacific. At the time I joined, we had income of $5 million. I've just stepped down, as you say. Our run rate is well over $100 million now. And the business has been completely diversified away from a coal heritage towards a very diversified 75% battery materials facing business today. And then in the meantime, Audley Capital became more like a private equity family office. And we bought some copper mines from Anglo American with the management of John McKenzie, who'd been at Anglo. And we paid around $200 million for that. And we've just merged it for around $2 billion with Capstone Mining to create Capstone Copper. So to some degree, an episode of my life is now concluded. Mantos is public. I've left Anglo Pacific. And now, I'm starting to embark on new ventures.
Yeah. So I just wondered, obviously, you just recently joined Audley Capital. Just wondering if you give audience an overview of the company.
Well, I've been working at Audley Capital for a long time, but I've just joined a company called CoTec, which is based on the TSX. It stands for Technology Investing in Commodity Extraction. And I hope that CoTech will be, my next major opportunity. And it's really going to focus on investing in very green disruptive technologies, which have a much lower carbon footprint, lower costs, more modular way of approaching the business, and much more flexibility, but sharing commonality of utilizing less power and less water than historical processing technologies. And then the idea is to actually take those technologies and apply them to commodity-rich assets and create a lot of value by doing so. But the focus of CoTech will be less on historic mining and more on the circular economy, on reprocessing and recycling, which I believe is going to be the next big opportunity for the commodity sector. So CoTech was a shell. It has significant tax losses and literally I think on Monday coming, it will start trading, having made its first 2 acquisitions and having effectively been admitted to the TSXV with a change of control by the Toronto Stock Exchange. So it's a very exciting beginning for what I hope will evolve into an innovative challenger to the incumbents of the mining sector in terms of how it can create value and extract commodities.
Before we go on to speak about CoTech, obviously you just finished obviously a successful stint as the CEO of Anglo Pacific, whereby the run rate of income rose by more than 20 times over 8 years. And you've just obviously merged your copper business with Mentos and Capstone at almost 10x its cost. Where do you see the value today?
Well, I mean, obviously, I've been thinking a lot about that, Rob, over the past year in advance of these changes in my career. And it's not clear to me that we're at the bottom of the commodity pricing cycle. I mean, there are many commodities have gone up a lot. The war has driven many prices much further than people expected. And so I think, undertaking conventional mining investments at this stage, we may well be at the beginning of a long super cycle. We may be, in the first lowest third, but it's clearly a much more risky space than when we were obviously at the bottom. And so the risks associated with investing in the sector have really grown enormously. And, God willing, there'll be peace in the Ukraine. COVID will go away. And then there is the possibility of certain commodities slipping back significantly with negative effect on commodity and equity pricing. And since the greatest determinant of profitability for investing in the sector is entry price, conventional mining investing is much more risky now than it was 3 or 4 years ago. So, I'm looking at other places where I think there will be value. And as I mentioned earlier around the CoTech philosophy, waste, I think, is going to be a big opportunity. I think recycling and reprocessing around the circular economy is going to be the next big thing. There's a lot of growth there. It's an incipient sector, which is somewhat fragmented. So there's a lot of opportunities, not only on the asset side, but also on the liability management side. And I think also, these process technologies, which I'm very interested in, are also relatively cheap and at the beginning of their life cycle. So those, I think, are the more interesting places to be putting money to work, which is really why that's the strategy of CoTech.
Yeah, certainly. I just wonder if you can tell us a little bit more about the new vehicle, CoTech, that you're involved in.
Well, as I said, it's a relatively small company. There was a shell. It has a lot of tax losses. It has, in addition to myself as CEO, and that's also going to be announced or has been announced in the next day or two, my longtime colleague Lucia Genovese, who ran the copper business of Glencore and is also the chairman of Ferexpo, is chairman of CoTech. Bram Jonker, who I worked with many years, is the finance director at Tom Albanese, who was the CEO of Rio, is on the board as well. And culturally, we expect the business to look differently to traditional mining companies. So we expect to see many more women, much more gender diversity, much more ethnic diversity, and a culture of a company which is much more open and collaborative and like a Silicon Valley company in terms of working with others to solve the problems facing the world and the sector. So the company, it was suspended because it didn't have a business, but we've just raised a bunch of money to make our first 2 investments. And that has been approved by the TSX as a change of business. And so the business is going to start operating now. And we hope then we will be able to scale something which it looks and feels different and new, is a disruptive player for the commodity extraction sector and has the opportunity to scale significantly.
You obviously just mentioned about 2 new investments. I just wondered if that have just been announced. I just wondered if you can just explain a little bit about those.
Well, both of those investments are typical of our philosophy, which is to buy really disruptive, innovative technologies and then apply them to assets. So the first one is a company called Binding Solutions, which actually comes out of the UK academic environment, but it's over 10 years old now. And Binding Solutions is the world leader in cold agglomeration. So it can make pellets out of iron ore without heat. It does so by using an organic polymer which can bind, but it doesn't have, therefore, the carbon footprint of traditional pelletizing, and its carbon footprint's around 5% of the traditional pelletizer. Moreover, a traditional pelletizer requires 1 to 2 million tons a year throughput to make it commercially viable. This requires 150,000 tons. So it's much cheaper, much greener, and is potentially a very important solution in the creation of green steel in the future. And so all of the world's leading iron ore producers and some of the steel producers are clients of Binding Solutions, and it's getting a very good reception from that community. Champion Iron, who are leading in Canada to try and create a premium iron ore product, are significant shareholders, and they have somebody on the board as well. But what's interesting about Binding Solutions is not only the primary product, which could be transformative, and in fact, the company is further advanced on creating EAF pellets than DRI pellets. And those EAF pellets potentially could be used to create EAF steel, which can be used for automobiles, which would be a big breakthrough for the EAF market. So that's another exciting development. But equally important and interesting to me is that the Binding Solutions technology can be used to re-agglomerate waste and tailings, particularly of ferroalloys and ferrous-containing materials. And they have developed 2 scaled plants doing that very successfully, particularly one in the UK, which has already done over 500,000 tons of briquettes from steel slag. And so CoTec has made an investment in this business. It's actually made an investment at almost half of the latest round of investing, which was done by a Japanese trading house. So we have an uplift on this investment when it's made. I think the payment's due to occur tomorrow. We've also got the right to apply the technology to waste opportunities in different jurisdictions. And each waste opportunity, and this again feeds, Rob, into my philosophy that where there's waste, where there's muck, there's brass, as they say, or at least that waste is going to be seen as a very valuable asset, as a sort of national heritage that needs to be looked after more carefully. And so each waste dump that we plan to recycle and reprocess is equivalent of a mine. You just don't have to mine it, you just have to reprocess it. And so we're engaged in discussions with different waste opportunities, some in the US, some in Canada, which I think will be very exciting for CoTec. And even just doing one of these would create more value than the current market cap of CoTec. So that's the first investment. The second one we're making is a commitment to a private equity fund that's being formed in Australia by the principals of our RFC Ambrian, who I've known for some time. And they are interested in particular monetizing the intellectual property of the CSIRO, which is a research institute in Australia. And again, we have the right to apply the technologies to particular assets. One of the first opportunities and technologies in the fund is a technology called Nextdoor, which is one of these advanced processing technologies. And Nextdoor, using MRI scanning technology, can sense within 2 seconds the grade of an ore on a conveyor belt. And so for instance, for copper projects which have, say, a 0.8% average grade, which might vary from 0.2% to 2%, Nextdoor can allow us to remove the 0.2% grade, which therefore means that you process much less, or the grades are higher and your carbon footprint is lower. And so that's the second example. And we are also now looking at different copper deposits where Nextdoor can really make a difference in their cost profile. So that gives you a feel of the sort of, innovative, disruptive technologies which we think can help reduce carbon footprints and reduce costs and really transform the way in which we extract commodities and the way in which the world will need for the next decade.
Yeah, no, and that's certainly good to hear those two investments that you've made, and look forward to the progress of those two investments. Obviously, with these, and obviously what's going on in the world at the moment, how do you see the sort of Ukraine crisis affecting the mining sector?
Well, I think the crisis, which is obviously regrettable, will have significant long-term and short-term consequences. I think in the short term, clearly, the supply of materials from the Ukraine in particular is going to be cut off. And so there are some commodities like, I don't know, iron ore pellets or potash, which will be affected. Obviously, sanctions against Russia will reduce the ability of the West to access certain Russian materials like nickel, but those may well go to China. So that may, after a period of time, not be a permanent loss of world production. But I think in the short term, we'll see, as we have seen, that coal is back and other less green materials are going to be necessary in the short term in certain countries. So I think that's obviously been very positive, for the coal price, both thermal and coking. But in the medium term, I think we will see a renewed emphasis and pressure on greening quicker, because this is going to delay us getting to the COP targets. And so it's going to be more expensive, and there's going to be more pressure to get there quicker later, because this is all going to be happening, more slowly than the world could have expected. Much broader consequences clearly are the breakdown of globalization, the breakdown of trading blocks, and a return to national strategic interests, as we're seeing, for instance, in Germany. All of that is much less efficient than having one global supply chain. So there's going to be much more demand and inefficiency in the commodities chain of supply, and that will lead to higher prices. So we definitely see more national supply chains in the US, in the UK, in different European countries, in Japan, in China, Russia, etc., which will be definitely more expensive for the world. And obviously there's going to be a lot of also cost inflation for the sector. So finding quick ways to extract commodities, for instance, using waste like CoTec is going to be doing, I think will be part of the way in which we can all help to make this difficult period more manageable for the different consumers and countries globally.
Following on from this, how do you see the commodity sector evolving over the next decade and I suppose beyond?
Well, I think everybody's realizing, first of all, with COVID and with the electric revolution, and now also with Ukraine and Russia, how important our sector is. I've always said that we are the spark that creates civilization in one way, and without the things that we produce, the world would grind to a halt. And for a long time, there was very muddled thinking where, for instance, I heard of institutions who said, we'll invest in electric vehicles, but we won't invest in mining. And they didn't link the two at all. I think the linkage is becoming more obvious, and we see governments waking up to the strategic importance of our sector, and also we see commodity-facing corporates like Tesla being more vocal about their dependence and need for certain commodities. So I think the most important thing will be that mainstream acceptance of commodities and mining as necessary, and not a necessary evil, but actually a necessary benefit. That we are the facilitators, that without the production of the commodities which we are responsible for, the world will not make its green targets. And so I think hopefully consumers will start to embrace the idea. And at the same time, of course, the sector will become much more responsible and greener, and the emphasis on ESG matters will help the profile. So I think we are going to be going into a better time for the sector. And clearly, there is going to be a lot of demand for battery-facing materials. We're going to have also, I think, demand from the defense sector. I mean, there's going to be a huge rush to rearm all over the world, which again, will require a lot of our materials. So you're going to have consumers needing materials for green, vehicles, people who want to have lower carbon footprint needing the materials we can produce for solar, for wind farms. The defense sector. I think it's going to be a much more positive backdrop, but there could be all sorts of surprises to come still. And when everybody is almost uniformly bullish about the sector, as they are now, as I've noticed in recent conferences, I think that is also a contrarian warning sign that things can appear from left field. So I think the sector is much more complacent about substitution replacement than it should be. And if commodity prices go up, we could see the emergence of new alloys which change the demand picture. So one can never be complacent and just relying on the current trend. I think it will always be a somewhat challenging space where you have to be nimble in terms of seeing the future trends.
Obviously, as you're involved in disruptive technologies, why has the mining industry traditionally been really slow to adopt new technologies from your perspective?
Well, I think the mining industry has, well, first of all, culturally, the mining industry comes from a less flexible place. I mean, the culture comes from the 19th century Ruhr, businesses where it was very much a command and control structure, and it was a competitive structure. I think we need to change our culture to being one where we can all work together to solve the world's problems, and not where it's a zero-sum game. It can be a win-win situation for all of us. So I think that was one thing, that people were very competitive. I think secondly, there's been, and rightly so, an enormous emphasis in the sector on safety, because if things are not safe, then people can lose their lives, which obviously is a huge cost. So I think people have tended, therefore, to have a bias to the known and not want to be too innovative. I think the culture's often been, well, if it's not broken, let's not change it. And so I think for many years, there were lots of new discoveries which were very slow to be adopted. I think the way in which the world as a whole is approaching risk and innovation now has changed fundamentally with the rise of Silicon Valley. I think people now are much more open to failure as a way of learning about how to do things better. And I think that, together with the accumulated inventions in these universities over the past couple of years, the pressure on mining companies to reduce their carbon footprint, and the rise of SPACs, which are more suited to technology than traditional mining, in my view, has meant that that old formula of resisting change has had to change. And so I think, you see now BHP Ventures, you see Rio Ventures, you've seen Anglo looking to invest in the space. And I think you've also seen now a lot of funds from Silicon Valley coming into the sector, like Breakthrough Ventures, or Generation Capital. So I think the whole picture is changing quite quickly, and I hope that CoTech will be an important part of the way in which the sector changes towards innovation.
Will CoTech play a role in the supply chain for the metals and minerals needed to speed up the transition to cleaner energy and more electric vehicles?
Well, I think we absolutely hope to do so. And, one of the advantages of focusing on recycling and reprocessing is you don't have the long time horizon to get permitted for a new mine. The time to get permitted has extended from discovery to production, so sometimes as much as 20 years. The world can't afford to wait 20 years for the materials that are needed to make this transition. And so, for instance, with binding solutions, if we found the appropriate dump, it would be 2 years before we can start producing metals. So I think we believe we can, help extract the metals quite quickly that are going to be necessary for the way in which the world evolves. The CoTech model is to both be a technology incubator and investor, but also quite rapidly to move to being an operator of assets. And it's in that operation phase where I think we can also, produce metals that are needed quite quickly.
The Canadian government recently announced a plan to spend nearly $4 billion to boost domestic production of strategic minerals like lithium and copper, which are obviously a key part of obviously the global electric vehicle supply chain. Are you seeing any regulatory changes to help accelerate the transition to a green economy that obviously could benefit CoTech?
Well, absolutely. I mean, I think as part of the breakdown of the global supply chain and the development of the national supply chains, we are seeing in all countries moves to subsidize and create funding for new strategic metals. So the US is moving quite quickly. I'm on the committee advising the UK government on the critical resource metals supply. The EU's been at it for a while. And all of these are different pools of capital which CoTech can tap in due course for the appropriate technology. So, depending where our assets are ultimately going to be located, and they will generally be in those Western jurisdictions, there'll be pools of capital available to subsidize the production of greener metals. And, the common characteristic of the technologies which CoTech is investing in, as I mentioned at the beginning of our chat, are that they are much cheaper, they are much greener, they're much more flexible and modular, and they use less heat and less water. And all of those things are things which I think governments are trying to encourage in their different jurisdictions. So the first couple of things we are looking at are, as I say, in iron ore and ferroalloys, in copper, cobalt, but we're also looking at interesting things like, recycling rare earths. We are looking at ways in which we can utilize nuclear waste much more efficiently. These are very interesting and strategic opportunities to create value for national economies as well as for CoTech itself.
And lastly, what's next for CoTech for the rest of this year?
Well, I think as I said, we're about to close our fundraise. We are going to start trading next week. Then I think we need to raise much larger sums of capital to buy the assets which we need to execute the technologies on. So I think we see the business scaling and growing, with becoming larger, more institutional. There are also new high-profile directors who we're in discussions with, who are going to join the board. And I think ultimately, the mining sector so far hasn't produced the incumbent challenges like you've seen in, retailing or automotive or, media that other sectors have seen. I think the challengers to the majors will come out of this left field technology space, using technology to build businesses which are at a cost advantage and more nimble. And that's what CoTech would like to be. That's their ambition. And so we're at the beginning of this journey, but we've seen very interesting technologies, very interesting asset opportunities. And I'm confident that we'll scale quite an interesting business from a small, slow start. So that's where we're going, Rob.
Yeah. Julian, really appreciate your time. And it's interesting to hear these two, obviously, new investments that you're involved in around, obviously, disruptive technologies for, obviously, extraction. And obviously, wish you well for the rest of this year and ongoing with those investments. If our audience wants to reach out to you, if they have any questions, how can they go about doing that? And obviously also find out how you're progressing with these investments.
Well, CoTec's a public company, so we will be making public disclosures. But my email address is treger@kotec.ca, and very happy to engage in dialogue with your viewers and listeners. We continue to hunt for disruptive, innovative technologies which are both scalable and have high margins, and for which there are interesting asset applications. And we also, are interested in finding assets which are, not as profitable as they could be. They may be somewhat marginal, where technology could make a big difference to them. So as well, if any of your followers have ideas, we're very open to listening to those. So thank you very much for the opportunity to talk a bit about CoTech and how I see the landscape changing and the opportunity set. And I hope I'll be able to report back positive things next time I appear on your podcast.
Yeah, no worries. And more than welcome to come back later on this year or next year and give us an update on how these and how CoTech and some of your other investments are going. So really appreciate your time. And those that are listening, it's an interesting episode. Certainly some disruptive technologies that Julian just spoke about. And I think a few of us need to, or a few people in the industry, and especially those that are listening, look at disruptive technologies to improve some of the processes that the industry is probably crying out for, because obviously the demand for commodities is just going to be ever increasing, and obviously the timescales need to be obviously reduced, because the amount of time to actually find a commodity and turn it into production obviously just takes a very long time. So really appreciate you for listening. Please share this episode amongst others in the industry, so they get to hear what Julian has to say and how they've turning these his investments into obviously the technologies that he's getting involved in, because obviously it's educational as well. So really appreciate your time for listening. So until next time.